Do you think your cryptocurrency is safe offshore? Do you think that HMRC don't know about it? Well, actually, there's some brand new reporting that is absolutely changing the crypto space in terms of what information HMRC are getting and how they can use it. So if you've not declared your cryptocurrency or you've got offshore accounts, watch this video because it's about time that you consider coming clean. I'm Joshua Tharby, Chartered Tax Advisor, and I work with cryptocurrency investors in the UK and the UAE to legally structure their taxes in the most tax efficient way. To date, we've helped hundreds of crypto investors save millions in taxes. And in this video, I'm going to share some insights as to what new legislation is coming in and why you need to be concerned about it. So from the 1st of January 2026, so literally in about 5 or 6 months time from when we're recording this video, HMRC will have access to a whole host of new information under the new CARF, it's called, which is the Crypto Assets Reporting Framework, which is just coming in. It's an OECD developed standard, which basically means a lot of countries around the world are signing up to this, including Caymans, the United Arab Emirates. So if you're UK based but you've got an account in Caymans or UAE, well, actually HMRC are now going to have access to this information, and I've got it here as well. The list of the information is actually going to be included and basically just exchanged and given to HMRC. Full name, date of birth, home address, country of residence, national insurance or tax identification number, and they're going to get information in terms of the value, type of crypto asset, type of transactions, number of units, and all of this information about all of the crypto assets that you hold. And all of these cryptocurrency exchanges are going to be motivated to provide this information to HMRC, because if they don't, they're going to get up to £300 penalty per user where the information they provide is inaccurate, incomplete or unverified. So it's highly all of these crypto exchanges are highly motivated to actually give the right information to HMRC. A lot of tax authorities all around the world are signing up to this. There are literally not many, developed countries that have crypto exchanges based there that, aren't signing up to this. You've got Malta, you've got Caymans. I think when I was looking at the actual details, Panama and El Salvador haven't yet confirmed that they're going to be part of this new framework and sharing the information with the tax authorities. So if you do have undeclared crypto assets in those locations, and I'll just kind of note there that actually you shouldn't have undeclared crypto assets. So when it comes to your tax residency, if you're based in the UK, you have a duty to legally declare all of your crypto income and gains that you've got for any tax year, whether they incur in Panama, whether they incur in St. Kitts, whether they incur in the UK. Regardless, the duty is on you to correctly disclose that information to HMRC. And if you don't, offshore tax evasion, the penalties can be up to 200%, very significant, interest on the late paid taxes, and so much more. So my advice would be, well, actually, firstly, do make sure you legally are declaring the right taxes that you have to be paying to the right tax authorities. But the point of this video is all around the area of privacy. Just because you're a UK national doesn't mean you're a UK tax resident, and a lot of people like the privacy. They're not doing anything wrong, but they don't want HMRC knowing what information or crypto assets they've got that are held in Panama or El Salvador on a brokerage, on a crypto exchange listed there. So for people that do value the privacy, it might be time to look at what country your crypto exchanges are based on. Make sure that you are working with a crypto exchange that isn't signed up to this new framework. And like I mentioned a moment ago, there really aren't that many. Most of the developed nations, the UAE, Caymans, have all signed up to this information exchange agreement, effectively is what it is. You might have Panama, you might have St. Kitts, you might have El Salvador, but actually getting a trusted crypto exchange that's listed there is probably the next hardest thing. But as this develops, you'll probably see a few more pop up in these satellite remote private tax havens, because there's obviously an appetite for it when it comes to crypto and ensuring privacy. But if you are a UK resident and you haven't yet declared your information about crypto to HMRC, now is the time to do so, because from the 1st of January 2026, when they start getting this information and they come to you saying, hang on a minute, we know what's up, the penalties are higher, they're more likely to charge interest, and as a result you're going to get a much more expensive tax bill than if you look at your assets that you've got now and realize, okay, I made a mistake, it's time to come clean to HMRC. When you do it this way, when you go to HMRC offering them a settlement, you get a much more favourable term, much more favourable payment plan, much more favourable tax bill overall than you would as if you leave it 12 months, HMRC come knocking on your door and say, hang on a minute, we saw you sold a couple of Bitcoins and you made £250,000 you didn't tell us about, and they will charge a lot more in taxes then. So my advice to anybody watching this is make sure that you fully understand what tax bill you've got to pay and that it's correctly paid. If you need any assistance with this, myself and my team are experts in dealing with cryptocurrency in the UK and the UAE. I'll be more than happy to offer a consultation to review your circumstances and provide advice on the issue. That's all for this week's video, guys. Hope you found it useful. Please remember, give it a thumbs up and smash that subscribe button. Bye for now.